You know there's a financial breakup happening right now that's worth over $500 billion. And it's not between celebrities, it's between the world's two biggest economies. The crazy part, the fallout is heading straight for your wallet. So, in this explainer, we're going to connect the dots between Beijing's massive power moves and why your mortgage, your car loan, and even your credit card bills are getting more expensive. It all boils down to this one number, nearly $700 billion. That's how much U.S. debt China has dumped, pushing its holdings to a 17-year low. And let's be super clear here, this is not some simple market correction. This is a financial divorce on a global scale. And believe me, the shockwaves are already hitting home. First step, you're going to feel it in your mortgage. For years and years, the housing market was basically supercharged by these historically low interest rates. Well, that whole era of cheap money, it's now being directly challenged. Next, you'll see it when you go to finance a new car. It's pretty simple. As the global cost of borrowing goes up, so does your monthly payment. And yep, you guessed it, even your credit card balances are tied up in this global power play. But how exactly? How does all this connect? Okay, so let's really break this down. How in the world does a decision made halfway around the world in Beijing actually translate into a very real hit to your household budget? It's really just basic supply and demand. For decades, China was the biggest foreign buyer of U.S. government bonds, Treasuries. Think of it like this. They were giving the U.S. a gigantic loan, and that kept interest rates low for literally everyone. But now they're selling those bonds, so demand is plummeting. That means the U.S. has to offer higher interest rates to get new buyers. And that rate hike just ripples through the entire economy. It makes your debt payments bigger, and it squeezes everything else. This timeline, well, it pretty much shows the end of an era. Just look at the period from 2013 to 2025. Interest rates were low, they were predictable, and that was thanks in large part to China holding all that debt. But as they started to aggressively sell it off, you can see the chaos, the volatility, and that sharp spike in borrowing costs. The stability that we all kind of took for granted, it's gone. Now, here's where it gets really dangerous. To keep interest rates from just spiraling completely out of control, the Federal Reserve might have to step in and print more money to buy the debt China is selling. This flood of new cash can lead to what we call sticky inflation, the kind that just hangs around at 4 or 5% and just doesn't go away. So you end up with high borrowing costs and your money is worth less every single day. It's literally the worst of both worlds. But this all raises a really important question, right? Why would China do this, especially when it means they're selling their holdings at a massive loss? The answer is simple and a little chilling. This wasn't a panic sale. It was a cold, calculated geopolitical move. Here's the key. Beijing watched very closely as the U.S. froze hundreds of billions of dollars in Russian assets after the invasion of Ukraine. And they learned a huge lesson. U.S. debt is just a paper promise, one that can be weaponized in a heartbeat. Gold, on the other hand, is a physical, tangible asset. You can't just freeze it or cancel it with a policy decision in Washington. This is all about trading financial vulnerability for real economic sovereignty. In this chart right here, it shows you exactly what they did with that lesson. For 14 months in a row, China's central bank has been on an absolute gold buying spree. They're converting the dollars they get from selling debt into physical gold bars. This isn't just a trend. It's a very deliberate, sustained pivot away from paper promises and towards hard assets. This is China's long-term playbook, and it's unfolding in 3 very clear phases. Step 1, sell the debt to get out from under American financial power. Step 2, buy physical gold to secure wealth that nobody can touch. And step 3, build brand new financial systems that operate completely outside of U.S. control. But China's big plan is part of a much, much bigger story. I mean, this isn't just about one country's strategy. What we're witnessing is the beginning of the end of an era of absolute American financial dominance. As one analyst put it, and this really hits the nail on the head, the old rules no longer apply. The core ideas that have guided global finance for decades, that U.S. debt is the safest place for your money and the dollar is king, well, those ideas are being shattered right before our very eye. And here's where it gets even more interesting. While China's official U.S. debt holdings are dropping, they're quietly funneling nearly $150 billion into these custodial hubs in places like Belgium and Luxembourg. Why? It makes the assets way harder for the U.S. to track and, more importantly, to potentially sanction. It's a meticulous, coordinated plan to build a financial fortress. And this is the alternative system they're building. It's called the unit. It's a new gold-backed settlement system for the BRICS nations. It lets countries like China, Russia, and their partners trade huge amounts of oil, minerals, and goods without ever having to use a single US dollar, directly chipping away at its global power. So this is the new reality we're living in, a world with more expensive money, inflation that just won't quit, and growing geopolitical risk. The big question is, how do you protect your own finances in this brand new landscape? The financial survival guide for this new era is actually pretty clear. First, it is absolutely crucial to diversify your wealth beyond just stocks and bonds. Second, you might want to consider prioritizing hard assets like gold and silver that hold their value outside the traditional system. Third, in a high interest rate world, getting rid of personal debt is more important than ever. And finally, you have to stay informed. These global power plays are no longer some abstract thing. They have a direct, real impact on your financial future. The era of cheap credit and unquestioned American financial dominance is over. The global financial system is literally being rewritten in real time. So the only question left to ask is, are you ready for what comes next?